Hey everyone, and welcome to the Super Options Spreadsheet. Now there's plenty of stock trading spreadsheets out there, but not a lot of option sheets, especially in the way that disseminate the data and the way that I like to read it. So I thought I'd create it, so let's get into it. So when you first come to this sheet, you'll see I set it up with rows that alternate between color and white. And I did this because I want to be able to read the data very easily by traversing across without getting lost. So that made a lot of sense. And then the other thing I wanted to accomplish when I made this sheet is to set up the data so it's automatically filled in. There's a lot of data when it comes to option sheets, and anything that can be automatically filled in is automatically filled in. In this sheet, over 50% of the data is automatically filled in for you. But before we get into the sheet and exactly how it works, let me head over to this Keys tab so we can punch in some key information about the sheet before you begin. So the first thing, you want to punch in your bank's contract fee. Now, my bank charges me 65 cents per contract. That's pretty common. If yours charges you the same, just leave that alone. I know some veterans pay $0, and I know other people pay a flat fee and then they get unlimited option trades. So if you're in that group, you just want to punch in a 0 here. The other is your margin account. I'm on a 20% margin. If you're straight cash, you'd want to change this to just the number 1. Otherwise, you'd want to punch in your margin requirement. And then you'd want to put in your starting balance, so whatever your account has when you first start the sheet. Okay, so let's go back into the sheet and I'll get into how this works. So the first thing we have here is stock symbol, pretty self-explanatory. Then we have the stock price. I like to keep track of whatever the stock price is. In addition to that, it's used for the margin requirement. And then we have whether this is a buy or a sell order. We have a drop-down menu for that. And then we have the trade strategy. So if you're doing stock, call spreads, straight calls, we have several strategies in here. And one of the best things about this sheet is you don't have to have a separate sheet for stocks and then a separate sheet for options. One sheet does it all. And then the strike prices, expiration, and the number of shares or contracts you're trading. And then the rest of the stuff is all calculated by the sheet automatically. Legs, transaction fee, spread width, open date, but you will have to punch in the price you're paying per share or a contract. And then the total open price and the reserve requirement, that's all automatically filled in. Now, the green section over here, these are all closing trades, and I've separated that with the green color. But at the end here, we have some more opening data, and I put this over at the end because it's really data for the whole trade. But I wanted to separate it from the other group because the other group is all statistics, and this is more notes for myself. So we have reason for opening. So I like to keep track of why I'm opening the trade. You know, if my friend gave me the trade, if it's something I found, just some notes on why I've opened the trade. In addition to that, I like to have an earnings number here if there is earnings. Now, if you're just keeping track of 10 or 15 trades, it's pretty easy to know when your earnings are. But if you're keeping track of 50 or 60 trades, having a little indicator when earnings is approaching is helpful. And then notes. Now, notes can be anything you want to put in here. I like to put in a date and then when a prospective close date is approaching. Now, when I open the trade, I have an idea of when I'm going to close the trade. Doesn't mean I'm going to stick to that date, but I at least like to have an idea of where I'm going to close the trade. And if I do, I like to put that in here. The other thing you've probably noticed is that we have a few different colors on the sheet that aren't our normal blue and green colors. So if I go back over to the beginning, you'll see in the expirations column, you see this pink color. So any color that is light pink or red means that it's an open contract. So when we close the contract, the color is automatically removed. You can see here, these are all closing trades. But I also like to have an indicator here on expiration showing me that we have contracts that are open. So if it's this light pink color, that means the contract is open, but our expiration is longer than 1 week away. So you can see here, this is about a month away, and this one's about a month away, but this one's closing in a few days. So anything that's expiring within 1 week will have a darker pink color, and anything that's expiring on that particular day will have a red color. So today is December 22nd. We can see these expire in 2 days, which is why it has the darker pink color. But hypothetically, if these were expiring today, I'll change the date to today's expiration. You'll see it'll change dark red. And there we go. And then also, because these are expiring on this day, it means these are definitely closing today. And we automatically fill in the closing date here. But as we know, I just changed that, so I'll go ahead and change that back, and this will disappear. Now, if I head over To the right side of the page, you'll see some other colors. And you'll see I have a color indicator in the earnings column. Now, anything that has earnings within 1 week will get this dark pink color. And then if earnings are on that day or the next morning, it's going to be dark red. As we can see here, today is December 22nd, and earnings for these are tomorrow after market close. We don't have to act on these today because the earnings is after the market close tomorrow. We can act on these tomorrow. This gets a pink color. But hypothetically, if we change this to before market opens, today would be the last day we could act on these options, and this would turn red. And same thing over here in the notes column. So if this is the last day to close the trade, this will turn a red color. And if you'll notice the one above it, it's yellow. So yellow actually means that we didn't close and we let the close date pass. Now, when I open the trade, I may have an idea of when I want to close it, but that doesn't mean I'm going to close it on that date. And if I let that date goes by, it turns yellow just to let me know we're past my initial close date. Finally, I want to get up to this top section where really all the magic happens. So this is all the statistics that I like to keep track of. And up here we have a win percentage, which is the win percentage for the entire sheet. We can also track by stock symbol, reason for opening, or trade strategy. I did 2 reasons for opening and I did 2 trade strategies because I like to compare and contrast. We have the profit and loss for whatever we're looking at, the average return on capital, the weighted average return on capital, the averaged annualized return on capital, and the weighted averaged annualized return on capital, as well as the number of trades that we are in. Now, I like to keep track of the weighted average return on capital. This is really the important statistic that any option sheet should have. Because if our average return on capital is more than our weighted average return on capital, that's a good indicator that you're putting the bulk of your money into the wrong trades. The weighted average return on capital is really what's important, because if we have one trade with $1,000 in it, and then another trade with $10,000 in it, and we lose 50% on the $10,000 trade and make 50% on the $1,000 trade, the average return on capital would say you broke even, but the weighted average return on capital would show you that you really didn't do so hot. So we really need to keep track of the weighted average return on capital. Okay, so now that we've kind of explained a little bit what's going on, let's go ahead and stick a trade in here. So we will do a trade on DDD. And we'll say this stock is trading about 61.22. And what do we want to do here? Let's go ahead and we'll sell a put spread. So we're going to sell a put spread. And then we put into the strike prices, we want to put a slash between the two. So we'll do a 55/60 put spread. And the slash tells the sheet that this is multiple legs and how many legs we need to calculate for. Then the expiration will say it is on the 21st of next month. And then the number of contracts we need to trade. We'll do 5 contracts. That sounds good. And you can see the sheet is automatically filling statistics in. So all this stuff is automatically filled in for us. And then we do need to put in the open price per share. So we'll say we received $1.90 for selling this. And then our total open price and our reserve requirement is filled in. And I can put in, we'll say our friend Jack gave us this one as well. And there we go. We can say there's not an earnings play. We don't need to put earnings or a close date. We'll just keep an eye on this one. And that's how that works. Now let's say you want to close a trade. So let's close this AAA trade. It's a trade we just opened yesterday, it looks like. So the stock was 54.50 when we opened it. Let's go ahead and say the stock traded up to 60.30. We did really good for one day. And we sold this one for $2.10. Let's say we're going to buy it back for 90 cents today. So that's pretty good. And the rest of this data will automatically get filled in. And you'll see the pink indicator was removed here, and we can see all of our statistics. And really what we care about is our profit and loss. Obviously, that is a key driver here. We made $593.50. We made a 41% return over one day, which works out to be a 14,873% annualized. So pretty good trade if that was actually a real trade. But we want to look at, okay, so Jack, he's done quite a lot for us. Let's go ahead and see how Jack's done for us. So I can put reason for opening, Jack. And this will give us our statistics for Jack and only Jack's trade. So we can see we got a Jack here, Jack there, Jack there, and those are the only 3 that are going to be calculated. So you can see here we got 3 trades that have been closed by Jack, and these are all statistics for it. So we can see we've done quite well, but we can see our average annualized return on capital is more than our weighted average return on capital. So this tells me the trades that we have the most money in are performing the least good. So that would be something that we would want to work on. And then we can see, let's go ahead and look at by stock symbol. So we have, let's look at BBB. And on BBB, we've done 3 trades as well, and we've won 100% of those trades. So that's pretty good. Let's look at another one. Let's one we'll have a loss on. So SSS. So SSS, when we punch that in, we'll get the SSS trade. So we have a trade here, and this is one we lost, and then we have another one here. And so we have 2 trades. We've won 1, lost 1. Our average return on capital is not good, and our weighted average is good. So this means the one that we won was significantly better than the one that we lost. And if we look down here, we can see, yes, we won $707 versus losing $281.50. So we did put the bulk of our money in the right trade here. And then we can see the same thing for our averaged annualized return on capital and our weighted average return on capital. So that's pretty much how that works. But also one thing I want to clarify is that you don't have to have the full word here that's in our reason for opening. So I can put in option strategy insider trades, and this will put up every trade here that has OSI in it. But let's say I want to compare our option strategy insider trades with only the ultra trades. So we've done 7 option strategy insider trades, and that's a combination of the executive and the ultra portfolio. And then we've done 1 ultra portfolio. So we can see here, this one strips out all of the ones that have the executive in it, whereas this one has both combined executive and ultra portfolio. And then trade strategy, that's pretty self-explanatory. I can just see, okay, how's my call spreads done? All right, done pretty good, won 100% of those. And we can also compare that to another strategy. Let's take a look at our put spreads. So if we look at our put spreads, we can see we've done 4 trades as well. We've won 75% of them. Obviously haven't won as much money with only 1,315, but still good. And that's kind of how the spreadsheet works. Now, if you get lost, we always have the key over here, which will show you what each one of these indicators is. You can see here, expiration 1 day to go is red, 1 week is dark pink, and any active option is the light pink color. And you can see that for the rest of the trades here. Now we also kept a statistics page, which will show you a few things. It'll keep track of how much money you're making or losing each month, as well as the trades that you're typically getting into. Now this doesn't start until next month, so there's no data here as of right now, but hypothetically, if I was to make $1,000 next month, it would total it up and put it on the chart here. I'll go ahead and remove that. All right, everyone, that's pretty much how this sheet works. You can download your free copy at optionsstrategiesinsider.com. And if you like the sheet, be sure to smash that like button, and I can't wait to hear your feedback.